Welcome to wherever you are in the world. My name is Andrew Fay. I'm the head of content at Minds and Money, and welcome to our first Minds and Money 5 at 5 show of 2022, which this week is sponsored by Kodiak Copper, Minera Alamos, and Collective Mining, and is brought to you in association with the Resource Global Network. For those of you who are attending 5 at 5 for the first time, aim of 5 at 5, 5 guests at 5 p.m. It's a show we started back in April 2020. We intended as a stopgap 60-minute show to bring the industry together whilst we were dealing with the lockdown and COVID-19. Now, I think it's 21 months on. We're now on episode 99. A few admin announcements before we start is to make the show as interactive as possible, please have your videos switched on. And if you want to ask a question or make a comment, you can either submit it via the chat function that you see in the bottom of the screen, and also on the bottom of the screen you'll see an invite participants option, and you can also ask your question live as well. We'll also be having some polling questions throughout the webinar where you can vote. So for today's show, we have a fantastic line of guests. We have Claudia Tornquist, the President and Chief Executive Officer of Kodiak Copper, Doug Ramshaw, President of Minera Alamos, Steve Gold, Vice President Corporate Development of Collective Mining, Phil Hopwood, a principal of KWR Capital, and Richard Gonda, president of Ignite Capital. And quite keen on kicking off a question for all of our panelists. If you had one wish for 2022 for the mining industry, what would it be? Can I go to Phil at KWR Capital first?
Hi, Andrew. Thanks very much for inviting me to be on the call today. I think my wish for the year is already coming true. I mean, we're seeing strong commodity prices already continuing. I think it's really important that we just remember sometimes just where we were just a couple of years ago. So I'll remind people, December 2018, commodity prices this time two years ago, was it 4 years ago actually, December 2018, copper was at $5,832 a ton. You know? Aluminium, or aluminum as some like to call it in North America, 1778. Nickel was $11,000 a ton. It's now $23,000 a ton. I mean, and gold a few years ago was at $1,300 an ounce, and now it's look at the price it is now in silver. So we're in pretty good times, and hopefully they can just continue on. Great
to hear. Now, Claudia, obviously at Kodiak Copper, you've been a beneficiary of the improved copper price. So what one wish for 2022 have you got? But you can say highlight copper price, but I'd also be interested in any other wishes that you might have.
Well, the first thing that came to my mind was copper going past $5 a pound. Yeah. And other than that, I'm wishing for continued exploration success for Kodiak.
That's good to hear. Steve, from Collective Mining, what would your 2022 one wish be?
Yeah, Andrew, I think I'm going to take a bit of a different tilt here. I think that the industry is facing some pressures at the supply chain level right now, whether it's assays or drills or parts for drill rigs and so forth. I think it's something that the industry is going to have to continue to deal with. I think it's something that most of us are dealing with, depending on the jurisdiction. So from our standpoint, there are gaps in the supply chain as we operate in Colombia, but we know that it's happening anywhere. And really our wish is that things do get streamlined. We recognize that there are supply chain crises across all industries worldwide, but our hope is that as an exploration company, for all the tools that we need and we need to hire and contractors we work with, that everyone is able to work efficiently and to reduce these sort of gaps in the supply chain that may delay whether it's exploration itself or reporting or so forth. I think it's going to be a challenging year this year in that regard. Hopefully we can work as an industry and try to address those challenges.
Yeah. And just on the assay drilling results, because this has now been an ongoing challenge for, I'm going to say, at least sort of 2 years. Has the industry done anything to correct those challenges? Has it, or is it still as bad as it was 2 years ago?
I think it's actually worse, because what's happening is you have at least in our part of the world, we have a situation where really, like in any industry, you have a labor problem to start with, and now you have a problem where those people who are working for these companies aren't able to come in for one reason or another, but usually mostly because of COVID. So unfortunately, it's probably the worst we've ever seen it. And what's happening is that in some cases, assays are being done in third-party countries for lack of capacity in any particular country or lack of labor. So I unfortunately have to say that it's probably gotten worse, and we're told it's going to get better, but we're probably in a very tough moment at this time.
Okay, well, we definitely hope that things sort of like turn around there. Richard Gonda from Ignite Capital, what would your 2022 wish be?
Ensuring that, or trying to have the explorers and developers be more mindful of ESG. So what that means is be careful of things like CapEx, get in touch with the local communities, and show investors that you actually really care and doing something about it. That would be my wish.
Just as a follow-up on that, it's definitely one thing I've noticed over the last 2 or 3 years. I've definitely seen strong movement on the exploration and on the exploration side towards an understanding of ESG issues. I'd almost, if I was being a little bit provocative, that if you try to talk to an exploration company, let's say 4 or 5 years ago, they may not have even known what the term ESG stood for, let alone have like an ESG policy. But now when I talk to ESG exploration juniors, the vast majority of them, I feel, have a policy. What do they need to do differently, or do they need to do next, Richard?
I think they need to articulate it better and inform the investment community what they're actually doing. It's one thing to say we care about it, but we know when someone's giving us lip service as opposed to someone or group actually doing something about it. And I think that's the key. We don't want to hear talk, we want to hear actions, and we want to know how you've articulated your thought into actions.
Okay. And then I think I'm just going to be interested in just probably maybe just bringing in sort of like Phil on that, because obviously at KWR, you're obviously an investor as well. In terms of on the ESG side, what are your sort of feelings on that? Do you feel the exploration community is doing enough, or can it do more?
It's like it's become one of those things. It's not like are you doing enough? It's like, if you want the investment, this is what you have to do, right? So I was having a conversation 2 days ago with a group who could actually finance some investment in a producer. It was for coal. It was around the subject of coal, and coal has now become a toxic commodity. Like, if you want to go even to the secondary lending market and you are a coal producer of like high grade thermal or even met coal in Australia, good luck. You're being driven into many of the places, but the banks won't lend to you, and actually the pension funds, the family offices like in the US, which people want to tap into them because that's a great source of investment right now. They just don't want to know. And so, by the way, where coal has gone, this is where other commodities can go as well now. And I think this is something that it's like you just have to do it. And by the way, just on that topic, if you want to see where the kind of this whole initiative is kind of going as well, you got to follow people like Adam Matthews with his Transition Pathway Initiative. In the UK, and he's been a bit of a leader with that, working with some of the sovereign wealth funds. And I'm not commenting on what Adam's doing and the like, but it's just that is the reality of our industry these days. And if you want the money, you have to be serious about it. And it's interesting what you said there, Richard, about paying lip service or actually doing it. That you have to show what you're doing. It's like, if you might remember, when people used to do things like, there was the Corporate Knight Sustainability Index and there was the Dow Jones one. And Dow Jones used to be around things like, do you have the right governance procedures in place? But you could have a huge score and do really well and be like number 5 on the listing there. But all you really had was committees, whereas Corporate Knights used to be where you'd actually have to do stuff, to show that you're doing real things. And I think some of those indices now are actually really good, actually, and Dow Jones included. They actually show that people actually have to do things, but that's what people want. It's like, it's not just enough to admit the First Nations representative at the airport as you kind of, just busily going to the front of the airplane. You have to do more than that now.
Yeah. Let's maybe sort of like kind of flip it over to our three sort of mining guests, and I'll ask Doug first, then Steve, and then Claudia. Doug from Minera Alamos, what are you doing in terms of ESG action?
Yeah, it's funny. I guess I don't get a pick as to what I'd like to see in 2022, but in fact, I was going to come up with something original, and then this actually dovetails into Richard's answer to that question, which is education. I think I believe that the mining industry at large, and they can talk about Minera, but I think at large, we need to be better educators. And whether that's on ESG or anything else, mining is seen as a dirty industry. And in reality, I mean, you're seeing all this new push on uranium now, and you're seeing these two sides, like two opposing bison on the range, coming together and just bashing heads. So in terms of 2022, I want to see it accident-free. We don't want to see more valet tailing spans, because that just sets us back another 5 years. We need to be better educators, because the reality is, for everything we can do to push on the environmental side and the social side of things, let alone our own internal corporate governance, the truth of the matter is, most mining, look at the outlook for copper. The majority of that copper is going to be produced from what is perceived by many as big, dirty holes in the ground. We can have lots of technological advances in this industry, but it is still very much a, shovel and truck kind of approach, creating great scars on the earth. And there's going to be a very interesting debate in the minds of people that are sensitive to the environment, and rightly so, and mining companies should be right at the top of that list. The very advancements in technological advancements that can lead to a cleaner world have to deal with the fact that there is going to be a bottleneck if we don't allow for permitting of operations in a timely manner that allow companies to make the big multi-billion-dollar investments that will lead to the very metals that can see us go into a cleaner age. So my wish for 2022 is that the industry continues and establishes better education protocol, not just to people that we want to invest in our stocks, but to the broader populace out there. In terms of Minera and ESG, well, we're lucky. We operate in a country where I think that in Mexico, where they approach permitting correctly, in that you can't start a federal permitting process without social license. You have to start with community consultation and community agreements before you can even do that. Now, that's to start the process. It's obviously incumbent on a company thereafter to maintain that social license. But I do think Mexico does it the right way. I think you see a lot of countries, Peru's a good example, where there's lots of issues at projects where the government's given permits and the company has not approached the communities the appropriate way, and you get roadblocks at operations and stuff like that. And I think Mexico still has its issues in that regard. At least is approaching it with saying, hey, as a mining company or an exploration company coming into a part of our country, you are becoming part of the community that you're operating within. And so, that all dovetails into what I'd like to see in 2022. We have to be better educators. We have to be good corporate citizens to our stakeholders and to our investor stakeholders.
Steve, what ESG actions do Collective Mining undertake?
Well, we're following a lot of the same pattern that we did in our predecessor company, which was Continental Gold, which we had sold 2 years ago. At the time, and the world has changed significantly in just 2 years. But as we built that company, we certainly could not have done it without an ESG platform. And it's not, as Doug has said, it's not just something that we can just come out and say. It really matters when you have a team that is responsible solely and only for ESG in country. Because what tends to happen is, we'll come to these conferences and put these fancy slides up and talk about all these wonderful ESG actions. But really, at the end of the day, there's groups of communities of between 10 and 50 families scattered everywhere in the areas at least that we work with, and they all really need to be on board. So we have a team of about half a dozen ESG focused individuals. We've been ranked in the top, as a matter of fact, we were the 11th top ranked ESG company in Colombia, and the only one in the top 20 without any revenue. And our executive vice president who runs our ESG program is one of the top 20 women in mining on a global basis. And the only reason I'm saying that is because it's easy to come up with these titles, but if you're not effective on the ground, you're just simply not going to succeed. So just to echo what Doug had said, the Mexican model works well because no one's moving forward until you take that component out of it. And once you've addressed the community issues, and that's not to say that there's certain issues that won't be ongoing, but once you've addressed these community issues, in many ways, it makes the job a lot easier because these people tend to not only just be okay with what you're doing, but they tend to be your partners down the road as well.
Mm-hmm. Claudia, what ESG actions are Kodiak Copper undertaking at the moment?
We are in Canada. Our main project, MPD, is in southern British Columbia. And in Canada, ESG is at the heart of the permitting already. You don't get a permit unless you do the right things environmentally, unless you engage with First Nations and local communities. So literally before we even drilled the first hole, we looked into those things and made sure we do all the right things. Now, we made a discovery 1.5 years ago, and that meant we really ramped up our operations, did a much larger exploration program last year. And the first thing we did was also ramp up our efforts in terms of environmental, in terms of consultation, and made sure we really sort of put in place a solid program in all these areas. Now, what do we do in terms of environmental? We have a whole lot of different initiatives, whether that's reclamation and looking after the ground that we disturb, whether that's looking after animals. We're doing nesting bird survey, wildlife surveys, fish surveys, things like that. We are monitoring water quality. We have the part of the program is also climate monitoring, etc. So it's quite a substantial program and it's scalable. As we grow, this program will grow. And another important part of our ESG agenda is certainly the First Nations consultation. In my mind, that's imperative. Like in the old days, companies would just go and explore or build a mine and only consult once they ran into problems. And that's just not how the world works anymore. We talk to the local stakeholders and First Nations, 21 of them in total, keep them informed of all we've done, of all our plans, and get their feedback and make sure we take it on board and implement their suggestions. So it's a very constructive working relationship and it works very well. And what we also, of course, try is to get as many as possible local stakeholders into our workforce and on our board. We're hiring locally. We've hired several First Nations people, and just last autumn we also added a ESG and community engagement specialist to our board, a lady called Lena Eagle, who is actually also a First Nations lady, and that certainly really enriched our discussions on board level as well, to make sure that really right at the top the priorities are right.
Oh, thank you very much for that. So let's, without further ado, let's move on to our first mining update. And just as I read out a brief bio about him, I think I'll just invite Doug just to go and do a screen share of his slides. You heard from him earlier. Doug Ramshaw is a senior executive and corporate director with more than 25 years of experience in the mineral resource sector. His work has focused on mineral project evaluation, M&A, and business development strategies supporting corporate growth. And just in case you kind of have just kind of like joined us, Doug is currently president of Minera Alamos. Over to you, Doug.
Thanks, Andrew. And I think we all like this back and forth discussion. So I've just got a few slides and a few minutes to kind of give you a 10,000-foot view of our company and our philosophy that drives our business model. Might make a few forward-looking statements. So we're predominantly retail-owned stock, 60-40 kind of split there. Approximately 250 million market cap, debt-free, with our first mine built. And this was a slide I created for Denver. We start out almost looking like a junior gold producer. And in many ways, a junior gold producer, call it a sub 100,000 ounce a year producer, might have aspirations to grow beyond that, but for a lot of reasons, they're never able to achieve escape velocity. And I created this slide when Bezos and Branson were trying to get into space and got to the upper atmosphere. So that's why I coined it at the time. And so the question I asked myself, and I think Minera is going to do differently, is why do junior gold producers often stay exactly that? After all, most majors at one point were a small gold producer. And, I have a colleague in charge of our vice investor relations who worked with Kinross when it was a 50,000 ounce gold producer. It's obviously much bigger than that. So some are able to do it and others stay and languish in that sub 100,000 ounce category. Well, often it's permitting timelines or capital requirements. Ultimately, by the time a second project gets brought on, because of timelines and because of capital, all it's really doing is replacing the first operation. With Minera and working in Mexico, we're in a jurisdiction which allows for very low capex builds. Our first mine cost us $10 million US to build in the middle of a pandemic. And also, so we've got low capital intensity and realistic permitting timelines that allow for a timely execution of a sequence of mines, which is what makes up Minera. We have 3 projects in northern Mexico. Santana, our first mine, is going through ramp up right now, having poured some first gold in October of last year. We hope to announce commercial production in the early part of this year. La Fortuna, which will actually be our third mine, is already fully permitted. And Cerro de Oro, a project we picked up a year and a half ago, is about to enter permitting. All being well, COVID aside, all being well, we expect that mine to come on stream in 2023. So 3 mines in the space of 4.5 or so years. That's something we can do because the capital intensity of these 3 builds comes in at 70 million US and can be built sequentially using the cash flow of the previous mine to support. And ultimately, we believe that we can achieve escape velocity and grow this into a meaningful gold producer, where we can look at other growth opportunities that exist beyond the foundational assets we have. So it should be a busy year in 2022. Obviously, continual updates on our first mine, permitting updates and exploration on what should be our second mine, with startup for that in 2023, all going well. And I think new producers often benefit from that exciting first 5-10 years of life, where there is organic growth to a production profile, whereas a lot of the mid-tiers and majors now can only really grow through M&A, and often it's just to replace a very large production profile. We can be a dynamic new gold producer. So very excited for what this year begins. And that's just for anyone wondering what a 10 million US mine looks like, built in the middle of a pandemic. That's our heap leach pad and processing facilities at Santana there. So without further ado, I'll stop the very short slide presentation.
Okay, well, thank you very much for that, Doug. Let me hand over to investor guests first. Richard from Ignite Capital. What questions do you have for Doug?
So, Doug, is $443 the cash cost for each of the mines?
No, the Fortuna PEA, which we did in 2018, that's our first two mines are open pit heap leach. And Fortuna is a 3.5-4 gram open pit, 6-to-1 strip. So whilst we could approach it from a heap leach perspective, it would be an absolute travesty to leave so much gold on the pad. So it's a milling operation. And I always say that a project never looks better than it does in PEA form. So, you know, whether it's the 450 number that the PEA calls for, I like to throw on 30% on top of that and say it could still be 600 US an ounce. And that's a function of the very impressive grade. The reason it got pushed back to project number 3 is that PEA was just based around a high grade starter pit with a 5-year life. And there shouldn't be a single person on this call, you know, that likes the 5-year life, however good the economics are. You know, we're trying to build businesses that can last 10, 15 years and beyond. But it's a very, very nice starting resource. And I'm sure by the time we build Fortuna, we will actually deploy cash flow from our first 2 operations to make sure that that mine life is more fitting, let's say.
What are you doing specifically on the ground in Mexico now in relation to ESG?
Well, I mean, a lot of what we do, and I'm guilty of feeling that what we do as a company is important to the community there. And perhaps being disingenuous to the investment community by not having more slides in a presentation deck highlighting what we're doing.
It's okay, we won't penalize you for that.
No, but it's a valid point, because when you're dealing with ESG, there's 2 elements to it. To me, the most important one is, are we doing right by the community? Secondly to that, because it's important from the capital markets, we have to be demonstrating that to the markets. But the most important thing is what we're doing at the community level, whether it's, you know, when COVID came around, the first thing we did was buy medical supplies, oxygen tanks and the like. We're in a remote community, but we wanted to be that first, because it's remote, we needed to take on the obligation to be that first line of support for them. You know, once that was done, we helped renovate the small medical center that they had there. When there were drought conditions, we were looking at ways to provide additional water for them. So things like that, all at the community level. And ESG isn't just the environment, isn't just the social, it's also the governance. And I think as public companies, that's a very important component too. So, you know, outside of the community there, I think we govern ourselves very, very well, mainly because I've looked at a lot of things that I don't like about our industry over the last 20 years and have decided to try to rectify those with how we run Minera. And I mean, a silly example of that, but I still think one that's important, is when we last set options, we set them at a price well above market, and we tied their vesting to meaningful production goals. I see way too many times companies setting options, the max that they can set at the lowest possible price, and they vest immediately. And I think as management teams, if we're looking for investment from people, we need to make sure that our interests are aligned with the very people that we're looking for capital in our company. So there's lots of elements to ESG that have broadened from what used to be CSR. And I think we approach all of them with diligence.
So you're tying the, sorry.
Oh, sorry. No, sorry. Please go ahead, Richard. Sorry.
Yeah, I just had a follow up there. So you're doing something a little different, you think? You're tying the ESG to an in-house economic metric, that is this vesting. So do you think that is a step in the right direction, that others, I mean, it's interesting, and I just want to know, do you think that you're trying to be a trailblazer there in that area, or is that just something that you're doing and you should just do what you're doing?
I'd like to, I mean, I think we're leading by a good example. I did see one other company do it, but their production levels to vest those, it was a bit of smoke and mirrors when you actually ripped it down. For us, I mean, when I say they're meaningful production levels, yeah, it really is tied to, ESG, because if we were dealing with problems at site and with the community, we're not going to reach those levels. And the options are, we're talking about cumulative production of 50,000, for every 50,000 ounces of cumulative production during that 5-year life of those options, 25% vest. So for full vesting of those options, we will have had to have produced 200,000 ounces of gold within, 5 years. Now we feel like we're going to produce quite a bit more than that, but I do think that it is tying management's incentive to actually operating success, and that operating success does come with an ESG component to it. So, am I trying to change the industry? I can't change the industry, but I sleep well at night knowing that our alignment is I think correctly proportioned.
Okay, well, thank you very much for that. Phil, do you have a quick question for Doug?
Well, yeah, quick. I don't know if it'll be a quick one though. I mean, so Minera Alamos has actually been in the press quite a lot recently over Christmas because of what happened in terms of a major shareholder decided to exit your share registry just around Christmas. So it must have been a fun Christmas for you there, Doug. So it would be interesting to hear a little bit about that from your perspective. What I think people would be interested in as well is, like, what are some of your learnings around that in terms of dealing with your investors, the existing investors, and also the people leaving your share registry as well?
Yeah, I mean, we are the company we are. The first thing I'll say is give the Osisko group incredible credit, because they supported us in the early days. They backed our operating team, and we're not the company we are today, hopefully the front end of this gold cycle, without their support. The stock was, my sense looking at the financials was they needed money. And if I'm an investor in a development company, I don't want it to be holding equity positions. So the first thing I do is look to monetize equity positions before going to the market. And I think they did the right thing for their shareholders. So I have no issue with them exiting, and it perhaps wasn't as handled as effectively as it could have been in terms of the selling group, but they worked with us and our bank, National Bank, to effect a cross to rip the remaining Band-Aid off on the second trading day of this year. And so I'm happy that they've gone on. Hopefully they'll use that cash wisely. And a friend of mine pointed out, it's kind of full circle of life kind of stuff, that in the early days the Osisko group helped fund us. And right now, when they obviously were looking to monetize that position, we've helped fund them back, which is a perfect way of thanking them, I guess, for the early support. So wish them well. They've been great shareholders up until this point, and we're very lucky that we've got a new slate of new institutional investors, as well as existing shareholders who stepped up to clean up that overhang.
Okay, well, thank you very much. So that was a fantastic update. Let's also move on to another really, really exciting gold story. And to present the story, I'm going to invite Steve Gold, the very aptly titled Vice President Corporate Development of Collective Mining, to go and share his slides and go and tell us a little bit more about Collective Mining. Steve, the floor is yours.
Very good, thank you. I'll just, there we go, let's do it. All right, well, thank you once again for inviting us along to join today. Ari is stuck in transit. He may be smarter than me. I've been told I'm better looking, but that's another topic for another day. Collective Mining is what we consider a unique and low risk junior. I know we're not the only ones to say that, but we think that some of our credentials would back that up. About 2 years ago, we sold Continental Gold to Zijin for an enterprise value worth of $2 billion Canadian. And over the course of the last year and a half, we had identified another parcel of land in the same area or gold belt in Colombia. And the mission was to replicate our success, our knowledge at the ESG level, and at the country level, and ultimately try to do it once more. So I don't have a slide in here, now, but we're about $160 million market cap company. We're debt free. We've got about $25 million in cash and about 50 million shares outstanding. It's a fairly tight float with management and one strategic shareholder owning approximately 75% of the shares outstanding. So so it's pretty tightly held in that regard. But just to go over from I guess a higher level, obviously any junior mining company has certain risks that people are willing to tolerate over the course of its evolution. In our particular case, we like to think that we've addressed most of them to the extent that we can. So at the management level, as I said, we've achieved success before in Colombia with Continental Gold. It's not an area of the world that we are unfamiliar with or learning. We have a good relationship with our local and municipal and provincial and federal partners in that regard. So we like to think that we've ticked that box. At the geologic area, well, we're situated in the game of closeology immediately on strike and to the northwest of Ars Gold's multi-million ounce deposit. They've got upwards of 8 to 10 million ounces, and we are actually sharing a fence with them. Many of the, I think the world's best deposits are looked at where you can identify a company that had been there in the area before and said, well, either they missed it or they had their own reasons for not taking this particular piece of land. In our particular case, we have all of our mining titles for this particular area just to the northwest of Aris, and we think that that bodes quite well for what we're trying to do. At the country level, it's interesting. I used to be on the contractor side at the working for a drilling contractor, and Colombia has always been the issues with Colombia have almost never been anything other than the issues with respect to the FARC and the different groups that had been operating in the country in the 80s. And the 90s. So in many ways, Colombia is going through now what much of Latin America had gone through 20 years ago in terms of mining success. If you speak to most Colombians, they believe that this is now their time. Whether they resent the last 20 years missing out on sort of that upswing is maybe everyone has a different opinion, but Colombia, as far as doing business, is really a top tier within the region, and the government has identified, really on the basis of having missed out on much of the last 20, 25 years of what had happened in Latin America from a mining standpoint. They recognize that now they're sort of in their first innings and second innings. So it's a largely unexplored country. And when we had built Continental Gold into what is now the largest operating mine in Colombia, we had helped navigate and ultimately worked with the governments to address some of the challenges they face as they tried to build their own industry. From an infrastructure and equipment perspective, excellent access of both. As I had identified earlier in our call, yes, there are supply chain issues across the world that I think we are all facing, but from an infrastructure standpoint, whether it's roads or telecommunications or electricity, that is all either nearby or already on site. And from a funding perspective, we stand right now with just about $25 million in cash. As I had mentioned, our drilling program for 2022 is we're endeavoring to reach at about 20,000 meters of drilling. It is fully funded with some left over, and whereas certainly a healthy broader market can help all sorts of juniors be able to raise capital, we are comfortable in the position that for all of our plans for 2022, which are quite aggressive, they are all fully funded, and we have sufficient capital to meet that. So the area of the country that we're operating is in the northwest, which is where I think over the last 20 years, about 100 million ounces of gold have been discovered. They've only touched on the copper exploration side, which is interesting because in our particular two projects, which I'll get to in a second, we believe that we are looking at a particular porphyry system, a gold copper moly system that we think probably feeds into Aris Gold's deposit to the southeast. Over the course of time, certain drilling will be able to substantiate that. But from the copper level, again, this is really just an area that is focused more on, as per saying, the Kodiak Gold Belt. Maybe one day they'll name it the Kodiak Gold and Copper and Moly Belt, but it's largely an unexplored part of this belt that we have started to work with, and there's really good indication, especially given who we are surrounded by, but even more specifically by our drilling results to date and various sampling and IP, that certainly we think that we're onto something. So our two projects are not too far from each other. On the left side of that map that you see is the Guayabalas property, which is our project that we're investing in heavily at the moment.
Sorry, I think you just need to kind of move from one slide to the next because we're still on the second slide. So you may want to you may want to skip through the slides very quickly. Yeah.
Do you not see the?
It's still showing slide number 2. So I think you need to move it to the 4th slide. I think you should be able to scroll it down.
Yeah, I have. I'm not too sure why.
It must be sort of like a glitch there, but I mean, sorry, if you just kind of carry on so we can get on to questions. Sure. Sorry. Yeah, sorry.
Sure. Yeah, sure. So without the benefit of viewing our map, then we have two properties. The Guayabalas property is our primary property. We're in this particular area from we all talk ESG and community relationships. It's an area that has had 500 plus years of mining history. It's no security issues, excellent access to modern infrastructure, and it's what we think is a pretty large scale mineralized system with a porphyry gold, copper, and moly source. So we think that we're somewhat comparable as far as the geology standpoint to AngloGold's Quebradona and La Colosa projects as far as geology is concerned. So without the benefit of my screen being shared, because it does say it's being shared, but for some reason it's been paused. I don't know why that happened, but I'll sort of just move into what we're seeing and then go straight to questions from that technical standpoint. We've started to drill. We've drilled about 7,000 meters so far of the 20,000 meter program, identifying results that are akin to this porphyry and some CBN vein systems. We have 5 targets, of which one in particular, the Olympus target, we've been drilling quite aggressively and expect to announce results as the assays come in over the course of the next I guess weeks and months, depending on what that delay is. So just to take a step back, and for lack of the benefit of being able to share anymore at this point, we have a company with been there before management and a geology that is proven mostly by what we've been able to sample in IP and drill to date, as well as our industry partners in the area. And from a risk return standpoint, we look at our project, we believe that we are in a first world mining jurisdiction that I think the broader investment community is only getting comfortable with Colombia over the course of the last several years, with the exception of Continental Gold. There's lots of activity in the area, and I think Colombia, in a general sense, will surprise most over the course of time, and collect mining at a more specific sense will probably be part of that success. So I guess we'll open up the questions for technical reasons.
Okay. No problem at all. And sorry about the slides there. This is got time to have one question, I think, from you, Phil. Do you have one question for Steve?
So just, and I'm quite interested in the Colombia story there. So I think from an investor perspective, and just on behalf of the people, perhaps, I mean, what support would be available for people who are interested in to invest more in Colombia? Because I mean, the Colombia story isn't quite heard as often, I would suggest, as some of the other countries around South America.
Sure. Well, I mean, it's a lot where perhaps Brazil was 20 years ago. I think the investment community needs to see success at the capital level and at the investment level, and obviously the return level. From, if I were to take a step back and answer your question as an investor, and not because we were involved in Continental Gold, but Continental Gold had an evolution over time. And once Colombia really started getting its wheels in motion over the course of the last 10 years in particular, investors started to benefit from that in the form of returns, and capital was being able to be raised for Colombia in general. To have put Continental into production required a tremendous amount of capital that we had to raise from the community. So to answer your question directly, it's going to take time. There are proven examples of that. We were involved in it. And I think that with, I would say, a decent risk appetite, when you look at Colombia and look at its infrastructure, it's a reasonably safe place to invest mining capital at this time.
Thank you very much for that. And it was a fantastic update there. I think in the interest of time, we need to just move on to our last mining update, but hopefully we'll come back to you later on in the program. Our final update is Claudia Tornquist, who's President and Chief Executive Officer, Kodiak Copper. Claudia's slides are already up. So just briefly, she was a former general manager at Rio Tinto. She's now President and CEO of Kodiak Copper. Claudia, the floor is yours.
Thank you, Andrew. Thanks, everybody, for listening in. I'll give you the very quick overview of what Kodiak is about. Kodiak is an exploration company focused on copper porphyry exploration, and our main project is called MPD and is located in southern British Columbia. We made a discovery that was a real game changer for the company in 2020, so not even 1.5 years ago. And then on the back of that, raised finance and last year executed a large drill program and significantly expanded this discovery, the Gate Zone as it is called, and now have for 2022 also a very large, even larger drill program planned. So it'll be a very exciting year as we continue drilling MPD and generating exploration results for our shareholders. Before I talk about the project, a couple of words about the people behind the company. First and foremost, Chris Taylor is the founder and chairman of Kodiak. He also founded our sister company, Great Bear. I'm sure many of you are familiar with that story. Fantastic discovery success and great success for Chris. And what Chris brought to or brings to Great Bear is the same what he also brings to Kodiak. He's a very creative, out-of-the-box thinking, smart geologist, and he leads our technical work and is certainly a big part of our success. I would also like to mention John Robbins, who is an advisor and shareholder. Many of you know John, well-known mining entrepreneur with many successes to his name. John put together the Discovery Group, a loose alliance of companies of which we are part. And I feel very fortunate to be part of a strong group such as Discovery, because it gives us fantastic access to whether it's technical expertise, contacts, deal flow. I really believe it makes Kodiak a stronger company than if we were just there on our own. So that's the sort of corporate background. Now let me talk a little bit more about the MPD project where we made our discovery. Here's the map that shows the location. Southern BC in an established mining area right between two big producing copper mines. We have Highland Valley to our north and Copper Mountain to our south. We are right off the highway, have an electricity transmission corridor going over our property. It's a very established mining area, so local workforce, local everything, services, supplies. We're very fortunate where we are. The location was a big part of why we acquired that project. It makes all the difference to obviously our exploration costs now, but also in the future, the economics of a potential mine. As I mentioned, we made a discovery. We came out with a high-grade intercept in September 2020, which changed the world for Kodiak and really generated a lot of excitement. You see here the original discovery hole of the high-grade zone. That's the one where I'm hovering with the mouse, hole number 4. The overall intercept was 535 meters of 0.77% copper equivalent, which was fantastic. Keep in mind the neighboring mines material at 0.23% copper, so a multiple of the mineable grades in the area. So great start. At the time, Teck invested $8 million in our company, which was a great seal of approval early on after only 4 holes. They made quite a significant commitment, and that, of course, was also very well perceived by the market, and they are a fantastic partner. As I said, last year was a big year of drilling for Kodiak. You see here on the left where we started the year, and on the right where we are now. At the start of the year, we only had the discovery hole and a couple more holes that we squeezed in 2020. And the gate zone was a relatively small zone of about 125 meters in length and 350 meters across, 800 meters down. And the red dotted lines here on the right show what we have now. We have drilled high-grade mineralization over almost a kilometer, 950 meters, down to 850 meters, and have significantly expanded the gate zone. It's now sort of starts showing some real size comparable to other porphyry mines in British Columbia. So great start, but still lots to come. Gate zone is still wide open, and we will drill more there in 2022. And what's important to understand is that the gate zone is only one porphyry center on our property, one of several, and we have a number of other very similar targets lined up that we will also be testing. You see on this black picture at the bottom, some of the other targets, Dillard, Man, and they have a lot of shallow historic drilling and copper and gold drill proven near surface, but nobody ever drilled deeper. And that's exactly where we had success at Gate. We drilled below the shallow historic drilling and discovered much higher grades. And so this year we will take this approach that led to our success at Gate and replicate it at Dillard, where we started drilling already, and then Man, and we have further targets also on the property. And I think a discovery at any of these other targets, that's the real sort of next big catalyst for Kodiak. That's the potential for another real sort of transformative event, just like the Gate Zone was. So that's in a very quick nutshell what Kodiak's about. Our capital structure. Lastly, a couple of points to highlight. We are a tightly held company, under 50 million shares outstanding. Management and board owns approximately just under 10% of the company. And we have a cash balance of 9 million. So well funded for a lot of drilling this year. So it should be an exciting year for our company with more exploration results coming in short order from last year's drilling, and then lots of drill results throughout the year and the potential for another game-changing discovery. Thank you.
Thank you. Thank you very much for that, Claudia. Phil from KWR Capital, what questions do you have for Claudia?
Well, actually, a question I would have for Claudia there. I mean, so Claudia's one of a handful of women CEOs in the junior mining sector. I mean, there's people like Tara Christie at Banyan Gold, Nicole Brewster, Renforth, Dan Spethman, Warrior. I'd ask Claudia, why aren't there more, from your perspective, in this sector? What are the barriers that we're actually facing to having more diversity, more women working in this sector, which already has a massive skills shortage, I would suggest?
I think one of the barriers, or the main barriers, is just history, that traditionally mining has been a very male-dominated industry, and it is changing, but slowly. And I think it's a matter of time, and we'll just see more diverse people in the mining industry, also in leadership positions. And certainly many companies are really trying to add to their diversity and are actively looking for female talent, female board members, and the like. So I'm very optimistic. It'll take time, but the mining industry is definitely en route to more diversity.
Richard from Ignite, what questions do you have for Claudia?
Claudia, should we expect then that the activity will be centered around the development or the drilling of gate zone in the different areas, north, south, east, and west? Is that what we should expect in 2022?
Well, 2022 will certainly drill more at the gate zone. It is still open in many directions. What's important to understand is also that we have other targets and we will test those too. We started, as I mentioned, Dillard already, and then Man, and in the south in the Axe area of our property. And that's, in my mind, the most exciting. I'm really looking forward to get to test those targets, because really, if we're successful, that'll be a real game changer for the company again.
Thank you.
And then just a question for myself, Claudia. You mentioned in one of your earlier graphs, you showed that obviously Tech Resources are taking, I think it was like an 8.5% shareholding. Are they an active shareholder or a passive shareholder?
Well, they are a shareholder, and their only right is to go up to 9.9% again in whatever financing we do. Otherwise, they don't have any rights such as board representation or the like. But having said that, they're very actively involved. Their geologist who's leading the work lives in Kamloops, which is less than an hour's drive away from our project. So we've had their technical guys at our project office and on the project multiple times. They've been very supportive and helpful. And yeah, they're a great partner. We're really, really happy to be working with them and having them in the boat.
Okay, and just like another question as well, because obviously your project is a copper project. I'm just interested as to obviously just your kind of view you're seeing from investors for demand for copper at the moment, and whether this whole sort of like theme of the transition to a green economy, battery metals, and sort of like increase of demand for copper. Are you seeing like a different sort of investor come to Kodiak Copper? Are you seeing more sort of like ESG type investors, or people who are looking to invest into the green economy and as a result are choosing to invest in Kodiak Copper?
Well, there's certainly a lot of interest in copper. I can tell that from firsthand experience, whether it's investors who are looking for good copper opportunities and also strategics. We've had many large copper producers knocking at our doors. They're all looking for the next good project because there are simply not many copper projects in the development pipeline. And obviously with the green revolution, there's a lot of demand for all battery metals and copper as well coming our way, and not much supply available. So really, there's a lot of demand for good copper exploration projects.
And I guess just throwing that question back to Richard and Phil, I'm just kind of interested in your portfolios that you have. Is like, are there any particularly like battery metals that you're focusing on more than others? Maybe I'll ask that to Richard first, followed by Phil. Richard?
I think we're looking pretty heavily at some of the battery metals. I think obviously lithium is high on the list. Of course, there's some problems with lithium in different places. So I would say lithium, but all of the battery metals are high in focus. I think that certainly lithium would be probably the leading one for us, given that it's such a precious commodity.
And Phil?
I mean, I'm a simple person. I mean, I like gold, and I like copper, silver. Yeah, but this book's been written on silver, the rises and fall of silver. And at some stage we all get burnt. We all know that. But I think those big themes at the moment that we're seeing around the electric vehicles and the like, and as Richard mentioned about battery metals, I'm absolutely right. Though one thing we are very conscious of all the time is some of these investments, you have to be so careful in terms of what's actually driving them, the markets and the like. So like, uranium prices right now are in a great place, but the uranium is not a spot market, it's long-term pricing with that long-term contracts. and the market, some of these markets are more opaque than others, which, by the way, all worlds do lead back quite often to copper. That's why copper is just such a good investment right now, and we fully support what Claudia's trying to do there, Kodiak Copper. But I do like gold as well, I have to say.
Yeah. Yeah. And I think kind of like just on gold, I'd just like to bring back in Steve and then Doug. I mean, Steve, I mean, there's going to be like a general sentiment that probably gold didn't perform as well as expected in 2021. Would you care to offer any predictions for 2022?
Well, if I was a cynic, I'd say that there's probably a plethora of other assets that people may transition money into. I've heard different theories. I don't know which one to believe. Some have blamed cryptocurrencies for sucking a lot of money that would have otherwise gone into gold. But I think if from a basic economic and theory perspective, we are in a point in 2022 where gold should perform well. I think 2021 was really just a real conundrum for most people. A lot of people just couldn't figure that one out. I think that the gold market the gold quote is acting well now in part because from an investment risk perspective, and you're starting to see interest rate movement as a result in advance of that, which is probably predicating the move in gold prices. So I really don't have a good answer for that. I've been looking for it for the last 2 months, but I think last year was really disappointing, and I think that 2022, if theory holds, we should see a better next 10, 11 months.
Doug?
Yeah, I mean, last year, you'd think all the ingredients were there for higher gold prices, but we'd had a very good 2020. Was there some consolidation? I do believe crypto has had an impact. But that being said, and I'll get to my prediction. I mean, let's not forget, and this goes back to what Phil said in his opening kind of remarks, these are very healthy gold prices for well-run operations. They are needed gold prices for poorly run operations, and there are optionality plays that command, require higher gold prices to make them work. I'm not a big fan of optionality. When we built our business model, we were in that $1,250, $1,300 gold environment. The most important thing we did was build it to work in that kind of price environment. The upside is great if it comes, but your business model shouldn't be predicated on needing higher gold prices. We have healthy gold prices. I don't necessarily want to live in a world of $2,500 or $3,000 gold. That being said, I agree with Steve. I think the setup this year is good. And I was asked in a little competition with some friends recently for my December 31st target price. So I'm literally just going to reiterate what I pulled out of my head, which is what most people putting price targets on gold do, despite all the fancy charts and everything. We're all guessing. But my guess was $2,105. I think I was playing the prices right in case someone went for $2,100. I've got the upside on them. About $2,100 gold. I'd be very happy with that. But I will, that's a new high, modest high. But again, we're in a very healthy gold environment. The only reason, those higher gold prices are really going to kind of need to be attained this year is we are seeing margin contraction as a result of cost inflation. So I think that will, for a lot of producers, they're going to want to see a better 2022 because the tail ends of 2021, we were seeing it in quarterly reporting. The cost inflation was the flavor of the day. And so hopefully for gold producers that need higher gold prices, they get them. We don't, but we'll take them.
Well, let's certainly hope for higher gold prices, higher copper prices, and higher commodity prices in general for 2022. We're now up to 6 p.m. London time, so that's the end of today's show. Just like to go and once again thank our guests, thank our sponsors who are Collective Mining, Kodiak Copper, Minera Alamos, and also to our media partner, Resource Global Network. The 10th of February will be our 100th episode, which will be featuring awards winners from our recent Minds and Money London show. Look forward to seeing you then. Until then, stay safe. Thank you very much.
Thank you.